Hello and welcome back to the Modern Firm Podcast. John Mitchell and Darren Root back with you again with some exciting guests. Darren, we're going to talk about succession planning today with some guys who really know their stuff. I'm excited, and I know this is something that you're dealing with really every time you talk to a firm right now.
Yeah, I mean, firm owners are just kind of all over this right now, trying to figure out their best path forward, whether they're looking to sell, looking to acquire, or just looking to make their firm better so they can increase their value. So when they do sell, they maximize.
Yeah, well, I want to introduce you to our guests today. Todd Steinberg and Chris Tabb are with us today to really shed some light on really the place that we are in the profession right now, with so many people looking to succeed, to exit, and succession planning in general. These guys are in it every day. So, Darren, I'm going to let you sort of pick their brains on behalf of accountants today. But I did want to introduce them as clearly as I can, because you guys got to follow these guys and stay close. They are really close to the concept of succession planning right now. Todd's the founder and managing partner of Thrive Financial Group. You may have seen that logo around. And it specializes in working exclusively with accounting and tax pros to assist them with buying and selling practices nationwide. He's also a core consultant with GKM. Many of you know GKM, which is a leading staffing organization for the accounting profession. Todd's been doing this for around 30 years, emphasizing on succession planning. I don't think he's that old, but that's what the script says. He's got a lot of energy and a lot of experience with this. I've got a chance to talk with Todd before about a different topic, and just really articulate, a guy you definitely want to follow. And I'm excited to hear from him today. And Chris Tabb. Chris leads the strategy and development at Right Exit, which is part of the Rightworks lab innovation that helps accounting firms prepare for M&A transactions. So he's got background spanning decades with technology, fintech, and he is crazy adept at leveraging data-driven insights to really optimize deal structuring, valuation processes, all the sort of ins and outs that are involved in succession planning and exiting your firm. So, man, these guys, this is exactly like you like it, Darren. Let's go after the guys that are the best. And let's start with a conversation about succession planning in general. Todd, let's start with you for a second. From your perspective, what percentage of the accounting profession have a sound succession plan? Like, this conversations that Darren's having with every firm, I mean, is it just, can you feel okay that right now I'm thinking about this and maybe I do or don't have a plan?
Yeah, well, first and foremost, thank you, John and Darren, for having me on as a guest today. I really appreciate having me back. To answer your question, no, most people do not have a plan.
I figured that was the answer.
Yeah, I mean, to put it bluntly, no, they do not. It's good that the conversation is starting to happen within firms because of all the talk you hear about M&A, firms being rolled up, or private equity coming into the profession and really making a splash over the last, let's say, 3 to 4 years now since the first deal was done with Eisner-Amper. And now it's kind of trickling down to mid-sized firms and even smaller firms. So what I find is that it's the small to mid-sized firms that are so in the trenches. Most of the managing partners are producing. They're not at an executive or C-suite level where they really have a team behind them that it oftentimes includes, okay, who's going to be the successor? Who's next in line to step in and run the business? So most small to mid-sized firms, if they're fortunate enough that they have somebody internally, great, but most do not. And that's an area where, it's probably a good time, whether your horizon is in the next year or two, to potentially merge or sell your practice, or 5 or 10 years down the road. It's never really too early to start thinking about succession planning.
Great stuff. Chris, Rightworks has done some really some surveys, some science around all of this, and not just in a very quantifiable way. Can you talk a little bit about the survey? Like 500 people almost, decision makers around tax and accounting were surveyed?
Yeah, absolutely. And thanks for having me. Just to put a fine point on this data is about 2 years old at this point, or approaching that. Or I guess it's only a year. I'm already in 2025. So it's only about a year old. But you're right, you hit it there. It's almost 500 decision makers, at accounting firms, it's going to be tax, bookkeeping firms nationwide who are included in the survey. And what we found was 43% of them, do not have a succession plan. And that actually beats if you look at the larger business, industry landscape. I think it's about 30% of businesses. So I'd say accounting firms are a little bit ahead of the curve, in at least having a plan or having something documented.
Guys, I mean, certainly it doesn't surprise me that most firm owners do not have a plan. And I don't say that from a negative perspective. It's just if you don't have um, if you don't have that next generation inside your firm, which most accounting firms are small firms, less than 10 people. Most of them don't have that person inside the firm that they've groomed to be the successor. And so this is something, it seems to me like um, most firms ought to be thinking about at some point before they want to finish. So I guess I would ask, Todd, maybe you first. So whatever age you are, not you particularly, but let's say somebody is 65 or 60 and they're thinking I want to do this until I'm 68. At what point do you see as the most advantageous time to begin thinking about, if you don't have that person, do I get that person? If you don't have that person, do I think about a firm that's upstream from me? Do I think about private equity? And then again, I mean, I've got questions about what size you need to be for that to happen. So what's your 2 cents on when, if you're a 60-year-old out there, you should start thinking about this? If your horizon is, you name it.
Yeah, great question, Darren. So I first would take a step back and say that regardless of where you are in your journey with your practice, whether you're 30, 40, 50, 60, 65, I even have some 75 or 80-year-olds, believe it or not, that are still out there practicing, and they're sharp as a tack. But it's never too early. So to the extent that some of the coaching and consulting that your organization does is going to ultimately help drive the valuation of your practice. That's not the question, but to start thinking about what can you do now to make your practice more valuable and attractive to a prospective buyer is a conversation to start thinking about today. If you are in that range where you're maybe a few years away from wanting to ride off into the sunset, my advice to that particular firm owner would be the day you sell your practice is not the day that you ride off into the sunset. So be very, very careful, because it's approximately a year long on average, depending on when you list. Let's say you listed your practice right after tax season. Hopefully and ideally, and in most instances, you'd have a transaction consummated before, let's just say, the holidays, maybe before January 1st, so that we're in place for the upcoming tax season with a transition plan. But if you're going to take 6 months to a year to sell the practice, and then most, if not all, buyers are going to want to have this transition phase so that this sale feels more like a merger than an acquisition, so that to the staff and to the clients, there's very little change. And the best way to ensure that there's little change, or that happens in little stages or phases, is to retain the owner or owners for a period of time. So and that will help protect your purchase price, because many of them are tied to some level of retention for a period of a year or two. And it also helps the continuity, of course, when you've got somebody to help pass the baton to in that scenario for the next year or two as the former owners begin to slow down or ultimately phase out. So I would say, as you're thinking about a couple of year window, figure about a year to sell it and get the deal consummated, and then another at least year or two to stay on board for a transition. Many buyers would love to have you on board for longer. In fact, I have many sellers now that are reaching out to me that are saying, with all these changes in the profession going on, I want to work another 4 or 5 years, but I don't want to deal with all these sweeping changes. I don't want to deal with the HR. I don't want to deal with the admin. I don't want to deal with the hiring and the training and all these other things that are challenging to many firm owners. And they'd rather just work as a employee or as an advisor or consultant and have a little bit more flexibility baked into their lifestyle. So that's what I'm seeing out there today.
Yeah, Chris. So if if we, again, if you're starting to think about this at all as a firm owner, can we talk through just what the options are? I mean, so one option is you have obviously somebody on staff that maybe it's, one of your children or a partner or something, and that's your natural exit strategy. Uh, what's the other options beyond that you're seeing right now that are viable? And let's just assume for a second that you're at, I don't know, 1.5, $2 million firm. So that's kind of where you're at.
Yeah, no, absolutely. So if you don't have an internal successor or a partner like you mentioned, you're most probably looking at an external sale. And if we could really focus in the aperture here to just look at the sub $5 million market, right? So the $1 to $2 million practices, those are going to sort of be on the leading edge of the downward cycle, more of that market, or I should say Main Street market. We actually did a study on this where we looked at what is the average price of a listing on the market right now, and it's about $650,000. So if you look upward market about $1.2 million, what you're starting to get into is, and Todd, I would love for you to backstop me on this or check me on this, but it's a lot of owner to owner deals. You're looking at a lot of search funders coming into the space. You've got tech investors who might be coming out of an exit, have some cash in their pocket, and they're attracted to the industry due to the high margins and also just their background in technology, right? They have this belief that they can come in, they can make the processes better, faster, and more efficient. And then I would also say you have a lot of acquire hire situations, larger firms who are feeling the burn right now on resourcing, and they're looking at the equation of I'm going to go buy a firm, integrate those folks into my practice, and then I can continue to scale. Lastly, we do talk with there's about 20 smaller private equity shops that I'm aware of. Todd, again, jump in here, who are actively looking in this sort of sub $5 million market.
So when you say 650,000 is the average, is that a one times revenue number? Is that how you're thinking about that right now?
So that's the annual revenue that they're reporting. Those firms are typically coming in at a 1.1, 1.2 multiple. Once you start to get over about $900,000, and this is just according to the listings data that we have, now you're starting to get into like that 1.4 model. And then we do see practices, of course, that break out of that, even up to a 1.9 multiple. But I mean, we could probably fill in the blanks on why those practices are earning those types of multiples.
Well, I mean, I think that's my next question. So I'll let Todd, what drives a higher multiple for an accounting firm, and what can they be doing now? Let's say that they're a tax shop with some client accounting services, which is probably pretty typical, and they're doing $1 million in revenue. What can they do to drive a much higher multiple than 1 to 1.2?
Yeah, so great question. So let's talk about as a broker, what are some of the factors that we would use to provide a broker's opinion of value on a business? So there are four main factors, and these are in no particular order, by the way. The first one would be location, just like in a real estate transaction. Location, location, location. A practice in a major metropolitan area will sell for more than one in a very rural marketplace. Virtual practices, those that are set up that way, extremely attractive for obvious reasons. You can operate that from anywhere. So that's a huge factor. Number two would be client mix. The monthly recurrence of revenues, accounting, bookkeeping, compilation work, carries a higher multiple than, let's just say, once a year transactional tax preparation. Advisory carries a higher multiple. Live payroll carries a higher multiple. So you have to look at the mix. Most attractive practices that I'm seeing the most amount of interest in from both existing accounting firms, investors, private equity, have a good mix of both small business to mid-sized business accounting, tax work. Somewhere in that maybe 50-50 range would be ideal. The third piece is what I'll say is profitability, but there's a little caveat there, and I'll explain why. If I have let's just say it's $1 million firm. Practice A over here has a 35% net profit, but that particular person likes to take 9 weeks vacation per year. They delegate a large majority of the work to their staff. They use the finest software in the industry. You have practice B that nets 55% of that $1 million gross income. But that seller's working like a dog. He maybe doesn't delegate quite as well. They're running lean and mean. So my question to a buyer would be, well, which practice is more valuable to you? Is it the one with the lower margin or the higher margin? So profitability is not the end all be all. Okay. I think beauty lies in the eye of the beholder, depending on what they're looking for. Okay. And then the fourth piece would be transition assistance. What type of assistance is the seller going to provide? Because at the end of the day, you're talking about the sale of goodwill, right? So that practice only has value to the new owner if those clients actually transition and that staff that might be in place is willing to stay with the new owner as well. So anytime there's a runway of a few years and there's a good solid staff in place, I see people acquiring practices almost exclusively for the human capital today, because we all know how hard it is to find good people, right? So all those things together are in my space, which is the $500,000 in revenue firm to about 5 million, is what is going to really help shape the landscape of where they're going to land in that, as Chris sort of mentioned, somewhere in like a 1 times revenue on the low end to about 1.5 on the other end of the spectrum, with most of them kind of falling in the middle at about 1.25 to 1.3 times X. There are other valuation tools people will use. There's SDE models, there's EBITDA, but still the lion's share of them are being priced and sold based on a multiple of gross revenue.
You know, as you mentioned that, talked about pricing, Todd, the different services, you know, it makes me think about bundling of services or unbundling of services in some respect. So, you know, I've thought about this a lot with ADP over the years because I do a lot of work. John and I do a lot of work for them. And, you know, payroll has a tendency, if you decide you want to sell your payroll business to ADP, sometimes that's, you know, 2 or 2.5 times. Fairly easily. So, but a lot of firms, based on advice from consultants over the years, bundle all of their services into a number. So they say, your client accounting is $2,000 a month. Well, when ADP wants to buy that, they don't want to buy all of that. They want to buy the payroll components of that. So, you know, how good of a job have you done tracking payroll revenue? Is payroll revenue broken out? Do you want to sell off a component of your business at 2 times and another component of your business at 1.3 times? What should you be growing? So I'm throwing a lot of questions at you, but it seems like pricing and packaging can be important in this. Tell me if I'm right in that.
Yeah, so you are correct in that, in my experience, live payroll, 2x, wealth management, financial planning, 2 to 3x. Business advisory services, higher multiple. Traditional compliance practice, bookkeeping, tax, is where you really see these 1 to 1.5 multiples. So if somebody has a very large payroll practice or they're doing wealth management, it's in their best interests to carve that out, or try to find a buyer who's willing to pay a higher multiple so that they do still have this one-stop shop, right? Where now you don't carve this out, send that out, and now the client feels like it's a little disjointed when they're accustomed to having everything under one roof.
You know, I think now that you guys have helped us set the stage a little bit, I do want to give some clarity to our audience as to what you guys do. Like, how do you help? You know, so Chris, let's start with you. Can you talk about Right Exit's effort, how you come alongside a firm, and what you're doing to help them address these challenges?
Yeah, absolutely. And coming out of those survey results I mentioned, that was really the impetus for the investment in the Right Exit product. And it was this idea that, there was no lack of buyers or sellers in the market, but there is a real lack of education and ability to raise that multiple. And a lot of what we've been talking about for years at Rightworks, the modern firm continuum, the playbook, right? All of these things slot right in on how you increase the value of your firm. And it starts with succession planning. So that's really where we come to the table. We come to it from a community approach. We look to highlight advisors from all across the spectrum. We work with folks who are both established and unestablished. And I think that really where we focus down in us is on the niches. No accounting firm is going to have the same needs that every other accounting firm is going to need. You may need a really rare niche type person to come in and help you with your particular transaction. So that's really the basis from where we start. And we're evolving into a learning community, and there'll be more announcements coming up in the next couple of months in the lead up to Inspire.
Todd, can you tell me a little bit about Thrive and about just how you guys also come alongside accounting firms during this time? I love having you guys both on at the same time. I think there is a real simpatico here, and I'd love to kind of hear the differences and also some of the ways that you've helped people here in the last couple of years.
Yeah, of course. So I think it's a great thing what Right Exit is doing as somebody who's been in the industry personally since 1994, believe it or not, helping accounting firms build, buy, and sell practices. That's all I've ever done. And when I started Thrive, about 7 years ago now, my focus was to help small to mid-sized firms buy and sell practices nationwide. A lot of my clients came from my years as a consultant, helping them with marketing and business development. And now they're ready to retire, relocate, get involved in other business interests. So found myself in a very natural position to bring buyers and sellers together. So that's what we do here at Thrive. The sellers are technically my clients, and then I go out and I try to find them and connect them with a buyer. In many cases, it did that. What Chris is doing with Right Exit is phenomenal. There really hasn't been up until this point a community or a place where people can go to get an education, unless they communicate, attend one of my webinars, see one of our workshops, etc. So I really like what they're doing over there, and not only that, but Chris and I think with the same haircut, we make a difference.
I thought it was required.
Yeah. Well, I don't know how the females in the industry would feel about that, but for
yeah, maybe not.
It works well.
I was just going to add on to that what Todd was saying. I think we are, working really in the same flow here, where Todd is out there. He's a known quantity in the space. He has a large following of people who trust the things that he's putting out. And I think where we would like to work with Todd, and where we've already had these discussions, is can we bring Todd into the fold on some of the stuff that we're doing? And that can both act as sort of new exposure for Todd, but then also really connect people with the resources that they need in the space, which can honestly be so difficult to find at times.
Great stuff. One question that I wanted to hit you guys both with, and Todd, let's just start with you. What is the effect of private equity on your efforts right now? How are you seeing private equity play into the conversation, and what's it sort of doing to the succession plan?
Well, as I said, I've been involved in working with accountants in the buy-sell space for many, many years. And up until about 5 years ago, it was accounting firm acquires accounting firm, whether they were growing their existing practice through acquisition, or they were leaving industry or Big Four to go out on their own and have that American dream. Today, fast forward to where we are, and it's wild. It's like the Wild West. The amount of inquiry that I receive for a listing for let's just call it anywhere from a $500,000 firm to a $5 million firm, which is my sandbox. Probably 60 to 70% of the buyer inquiries are private equity. Small groups that are trying to get their initial platform set up. And some of them have been fortunate now in the last few years to roll up a couple practices. They're in a much, a stronger position to be of interest to a seller because they've already got a platform, they've got people. The hard part, I think, for private equity, in my view, is that most accountants, they want to be able to put their head on the pillow at night knowing that, like, this is the person I'm leaving my clients and my staff to. And private equity, while they'll throw money at you, it's not necessarily a game plan that they have all figured out. And the way that they oftentimes like to structure transactions is, while they will provide a substantial down payment, they oftentimes want to have some equity role, and not all sellers want to do that. So they're having a hard time penetrating the marketplace, even with the amount of money. And I think that just speaks to most CPAs and tax professionals, that they care deeply about who they're going to leave their clients and their staff to. So there's still a lot of traditional buyers out there. To me, a CPA firm that is acquiring another CPA firm still has a real advantage in the marketplace, especially when they're talking the talk and they can walk the walk. So while it's definitely here to stay, and it'll be interesting to watch over the next couple of years how this dynamic starts to play out as there's a lot of consolidation and roll up within the industry. They're smart people. I'm sure they'll figure it out. But personally, I have concerns over what the private equity mindset of like profitability is going to do to the service and the culture of a lot of accounting firms that are out there today, as that remains to be seen. And I'm sure it's playing out all over the country with some of the acquisitions that have been done by private equity. So I'm glad they're here, because if anything, it's increasing valuations. It's helping clients get better terms. It's giving people an option. But when I do an interview with a seller and I say, what's the most important thing to you? For some of them, it's money. For some of them, it's the right fit. So to try to kind of find that right balance between the two is where private equity sometimes hits the mark and other times they just don't.
Chris, anything to add to that from your perspective in private equity and how it's affecting succession planning?
Yeah, absolutely. I echo a lot of what Todd just said there. I would just, look at it through the lens of, the firms that I'm working a lot with today are typically under that $2 million annual revenue number. And, a lot of them, there's not enough meat on the bone, right? If I'm a private equity firm coming in and looking to acquire, unless I've got a playbook, right? If I've got a tech strategy and I've got a team and, maybe this is my fourth or fifth acquisition, maybe it makes sense. I would say additionally also that while we do see a lot of headlines and Alan Colton is out there and, he's doing great work and sharing a lot of these deals that are coming out, that tends to overshadow what's happening in the lower part of the market, right? And to Todd's point, it's still mostly owner to owners, more tech integration, acquisition type deals that are taking place. But the last thing I would say is that it is driving indirectly some change in the industry. And what I mean by that is it's driving this roll-up mechanism that Todd talked about, where these folks are coming in, and I would almost describe them as like the lower end of the private equity market. They're buying up firms anywhere from $250,000 to $750,000. They're putting them together in a platform, and they're really looking for that next evolution at $10, $15, $20 million, where that's a lot more appealing from a private equity firm versus going and buying a $500,000 practice.
That makes a lot of sense. Darren, I think about these guys and what they're doing every day, and I compare that to the conversations that we have with real human beings that are really concerned about the future of their own retirement, their children, their grandchildren, the firm that they've built. And I'm just grateful to have some experts like this around and some people to lead people to.
Oh, for sure. And I think that we are on sort of the precipice of significant change in the profession, change from technology, profitability, all of those sort of things. I think a lot can change in the next few years with AI in this space. But there's an awful lot of people who are looking to get out now or get ready to get out now. And so it's just an interesting time to be thinking about, do I stay in a little bit longer? Do I evolve my firm? All these things. So it's great to hear your guys' perspective on how you coach firms and move them along this path.
Yeah, if I could just add one thing that doesn't get talked enough about in the whole succession exit planning methodology is understanding your wealth gap. So today, if you can go and sit down with an exit planner, or if you want to reach out to one of the advisors in the community, it's this concept of what is my firm truly worth, right? What do I need to fund my lifestyle? And then what is the gap? So once you identify that gap, then you can start putting into place some of these value drivers to accelerate that value for the right buyer. My end point would be you don't want to be caught in a position where you have to sell to the wrong buyer just to essentially fill that wealth gap, and then maybe not leaving a great situation for your staff and your culture and your clients.
Yeah, great point, Chris.
Great stuff. Chris, how can people find out more about what Right Exit is doing right now?
Absolutely. You can find us on LinkedIn. You can just search Right Exit by Rightworks. We're always publishing insights, studies. We share a lot of material. Todd was just on there a couple of weeks ago. So yeah, join us. We're small, but we're growing.
And Todd, how about you? How can people find out more about what you guys are doing over at Thrive?
Sure. So they can visit my website, which is Thrive Financial, GRP, short for group.com. We host webinars on CPA Academy. We're visible in a lot of the shows. So whether it's Thomson Reuters Synergy or some of the other bigger shows, we typically have a presence there. But yeah, if you're in that small to mid-sized firm range and you're thinking about buying to grow your practice, or maybe you just want to do some succession planning to kind of get your ducks in a row, as I said earlier, it's never too early to begin to do that.
I love the conversation today, guys, and I love you guys fit right in with the Modern Firm podcast and what we're trying to do, bringing modernity to maybe some firms who haven't seen a reason for it. And now this is just one more reason for them to prioritize their people, to modernize their technology and their processes. And appreciate you guys joining the bandwagon today and being a part of the Modern Firm podcast. So,
yeah, thank you guys.
Darren, it was a great time. Hope you guys heard something today that moves your firm forward. Thank you for being here. Thank you to our guests, Chris Tabb and Todd Steinberg. Thanks always to my buddy, Darren. I'm going to look forward to seeing you next time on the Modern Firm podcast.
Thanks, guys. Thanks for listening.